U.S. natural gas futures are hovering just above key technical support at $3.30, as traders grapple with mixed signals, mild near-term weather and signs of longer-term supply tightness. For now, short-term fundamentals remain firmly bearish. National forecasts for May 1 to May 14 show widespread mild conditions, with temperatures largely in the 60s to 80s, curbing both heating and cooling demand. While parts of the southern U.S. may briefly hit the low 90s, overall consumption is expected to stay subdued. This outlook is echoed in the data. U.S. gas demand on Tuesday came in at 65.7 billion cubic feet daily, a 2.7% drop compared to the same day last year. With spring delivering comfortable conditions and muted residential commercial usage, any upside potential may be limited unless a stronger weather-related catalyst emerges. Meanwhile, all eyes are on tomorrow's EIA report, which threatens to deepen the bearish mood. Analysts are bracing for a massive 111 billion cubic feet storage injection for the week ending April 25, nearly double the 5-year average of 58 billion cubic feet. If realized, this would mark a stunning shift. The current minus 48 billion cubic feet deficit would not only vanish but swing to a 110 billion cubic feet surplus by mid-May, flipping the market narrative on its head. Nevertheless, the current price rebound appears fueled by speculation over a hotter-than-normal summer, even as meteorologists project that ENSO-neutral conditions are likely to persist through the Northern Hemisphere summer of 2025. You might be wondering what neutral ENSO conditions mean and what they could imply for natural gas prices. Well, a neutral ENSO setup means neither El Niño nor La Niña is influencing U.S. weather, leading to more regionally driven and less predictable summer conditions. Historically, ENSO-neutral summers tend to feature near to above-average temperatures, especially in the central and southern U.S., though rainfall and extreme heat patterns are harder to forecast. For natural gas consumption, this setup could result in moderate to elevated power sector demand, particularly if regional heat waves emerge and boost air conditioning use. However, the absence of a strong ENSO signal also raises the risk of uneven demand, with potential softness if widespread extreme heat fails to materialize. Furthermore, as shown, above-average precipitation is expected in the eastern U.S., a major natural gas consumer, which will cool the soil and, in turn, reduce energy demand for cooling. Overall, with summer power demand forecasted to remain normal, the key factor moving forward will be the high natural gas production levels, which are likely to keep bearish pressure on the market in the coming months. Nevertheless, keep in mind that weather forecasts are often subject to change, so conditions could shift in either direction as we move forward. With weak demand on the horizon and a fragile technical setup in play, the near-term outlook skews neutral to bearish. All eyes are now on the critical $3.17 level. If that floor gives way, it could unleash a wave of selling, driving prices down toward the next key support at $2.90. The ability to hold above the $3 level reflects strong technical support and building bullish sentiment heading into early summer. However, if early season heat fails to materialize, a growing storage surplus in May could quickly weigh on prices, potentially turning the $3 support level into resistance. Please like, subscribe, and comment to support the channel.